Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 2nd of April, 2018, around 2:35 in the afternoon. Well, you can see the stock market taking a beating. Metals reversed right back up today. And the big surprise to me was how strong copper was, to be honest with you. So what's going on in the metals and what's going on elsewhere? You know, when we had put tariffs on steel and aluminum, China did their tit for tat, and they said that they were going to put tariffs equal to, well, not equal to, on $3 billion worth of exports we sent to China. We didn't know the makeup of what was going to be included that they were going to tariff, and they announced 128 items today. The market heard that, reacted. And, you know, the news played it wrong, I think. They had to explain properly these are the items that China make up the tariffs that they had pre-announced. Now, the problem that's rightly so on everybody's mind is that President Trump has to, by his own proclamation, signed one, by the way, have to announce the makeup of the $50 to $60 billion in new tariffs going on China. Has to do that by April 6th. So that's only 4 days away. Now the market's all nutty about what? A trade war. Will we get there? Well, this is a tit-for-tat game. Even when we announce it, there's 60 days. You heard me, 60. 60 days before they got into effect. Therefore, it gives everybody time to sit down and figure out intellectual property rights and the like. But we seem to be going through these phases. Something happens, the market goes nuts on one way, then comes back. Today's a Monday. I see a big break in the market, which tells me right away maybe you get Tuesday reversals. Maybe the metals reverse some of the gains today. When I take a look at a weekly chart, you can see that we're staying up and over the 18-week average of closes, which is friendly. But you can also see you haven't gone anywhere. You're spinning your wheels, and if you're a trader, you know that darn well. You just haven't gone anywhere. When I look at a close-only chart of the June gold, the market came back last week, and you can see it right here, challenged this 18-week moving average of closes, and was able to today come back with a vengeance. Basically, you're still staying with the pattern of higher lows and higher highs on a close-only basis. You did not do that on the daily chart when you look at the ranges included. This break right here on Thursday took out these break lows. Now, what do I mean by that? You can't really see it unless you put the swing line on, and that was right here. And yes, inside days, days where you don't take out a previous day's high or low, are often very important days as a chartist. You took out that day's low, so now you have a pattern of a higher high, but the low took out that previous low. You are not trending. You're whipping back and forth according to the definition of what a trend is. Typically, you may have your own, I view a trend as having higher highs, higher lows, plural, in an uptrend, lower highs, lower lows in a downtrend. No trend has this pattern. Now, there's a difference between trend and bias. The bias of the market is up because the market is trying to stay as best as it can above the 18-day average of closes. The Bollinger Bands, which are these black lines, got narrow, expanded upward. The market, if it was really bullish, in my opinion, shouldn't have taken out this low that I'm pointing to. It did, and therefore the market went trendless as far as I'm concerned on it. Momentum is also sideways. Let me take you back to how this looked. This was the Thursday close. Momentum was pointing down. The market's under the 18-day average. Is the 100-day average going to be hit? Would be a logical question. Bias down, no trend, momentum down. Now momentum has flattened out. There is no momentum telling you it's going up or down. It's given up on that. That's what I'd call sideways, sort of stuck. When I come to GLD, I was hoping it would give a clue as to whether or not the futures were right or wrong. It gave nothing. lower low, higher high. It looks identical to the futures. GDX doesn't. GDX has the pattern of higher lows and higher highs. So the mining stocks are the one sector that look good, and they stay looking good unless you take out 121.56. Admittedly, the market is up to the upper Bollinger Band, which is often a key resistance point. If that gives ground, maybe you can get to the 100-day average. And it's using power as it comes up. It's not yet overbought. It will be if it goes any higher tomorrow. The gold-silver ratio dropped a full point. Silver suddenly got stronger than gold. I have not changed what I've told you. I think the 81 level is, historically speaking, extremely high on this. And I understand that people are saying it can go higher because they're looking at inflation versus trade wars, but I don't think there's going to be a trade war. I think you're going to have all the talk and impact of one, and at the last minute, it gets resolved. But you've got to live through the day-to-day events, which is very difficult. When you look at silver, there's no trend. You've got a higher high, a lower low, stuck in this black bands of these slow stochastics. And like in the gold, the momentum goes all over the board, back and forth, as you're just spinning wheels and getting chopped up in the market. Now, the copper's an easier call. The copper market at this point was embedded. Embedded means both numbers that make up the slow stochastic have been staying under 20 for several days. And you had that. When you lose it, which you did right here on Wednesday, that reading came out to 2187. It often means that momentum is leading price and you're going to go back to the 18-day average to neutralize the chart, and it's like a game where you start over. So here you are, you lose the embedded reading. There you are on Thursday, and here you go today, even with the threat of the trade war. Now, it makes really no sense for copper to go up if you're going to have out-and-out trade wars, because everybody fights and they put tariffs on washing machines, as we did already with Korea and items like that, and God knows what we get from China. So this going up sort of tells me that a lot of talk, not necessarily a lot of reality. This was the reality of the fear. This market seems to be ahead of the actual market. In the platinum market, you're developing the embedded reading. Let's look. Both numbers here are under 20, right? Under 20 the day before and under 20 the day before. So you have the embedded reading. It's paying attention to the lower Bollinger Band. It might get under it, then it tries to get back over it. So this market, from the bear perspective, it stays bearish until you're able to get up into this area and get rid of it at the same time, the red line over 20. If you get into that area and that red line stays under 20, expect the bears to be selling into it. When we get to the palladium market, a big drop. Now, 2 days in a row under the lower Bollinger Band. The odds of it staying under that tomorrow give it 3%. Why? Because my own rule of thumb is that if you go back on your charts, it's very rare you get 5 days in a row above or below a Bollinger Band. Can you? Absolutely. 7's the next common number after 5, but it's a long way from it. In other words, let's assume that the percentage was you're going to hit 5, 10% of the time. Well, you're only going to hit 7, 5 or less percent of the time. Got it? You're 2 of those 3. I just look for the market to drift back over. Is anything bullish on the chart? Nothing at all, other than it's oversold. It is not embedded. In the dollar index, this is about as sideways spinning of a market as you can get. And if you're trying to make money in it, it's been a son of a gun. Ask the currency traders out there. It's been easier to make money off of pairs, which you're long one currency versus the other, than the dollar, which is just sort of stuck right here in all this nonsense talk of trade wars. But with that nonsense talk, and it's not nonsense if it happens, obviously, so you take it seriously when they're talking about it, but you have to understand everybody loses in this, and what the president's been doing is trying to win concessions. We'll see what he does. He backed out smartly of not signing a Korean deal so far because they're talking to North Korea. He's got to have some leverage as he talks to them too. understand the art of negotiation. And it's very different than a president that comes from a political background when you have a business one and you think you're a negotiator, and he's written books about it, so it gives you an idea. To find out about what price counts do, it's pretty simple. Price counts rely on a pattern. So let's assume you get this type of pattern and then the market starts breaking out. It's an after-the-fact measurement tool that tells you where the markets might go. If you get a top pattern, we teach you how this pattern develops. It's the same thing, first, second, and so on counts. I use it all the time. It's one of the things that I came out and I was predicting Bitcoin moves with. If you'd like to find out more about it, call us. Go to our website. You can click up here at any time that you'd want. That'll take you as well, if you're watching us on YouTube, right to that sign-up page. We'll get it out to you by email. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.